So today's one of those days where mortgage rates are pulled in two different directions. One, jobs market. We have a jobs report that just came out, and it actually came in pretty good. Then on the other side of the equation, we have oil. As oil stays higher for longer, that's going to keep inflation up, and that's going to cause the Federal Reserve to basically hold rates higher for longer. So if you're watching this video, you might be hoping to find out what's going on with mortgage rates. Well, you came to the right channel, folks. My name is Dan Frio. I'm the host of the Rate Update. I want to explain to you guys what the Federal Reserve is going to do in one day and how those will be affecting these things over through here. So folks, my name is Dan Frio. I'm a licensed mortgage loan officer in all 50 states as well as Puerto Rico. If you need some help with a mortgage, I'd love to help you out. I'll give you all my information at the end of this video, but my whole goal is to help you understand what in the heck's going on with these and the whys behind it. So the first thing we're going to do each day is we're going to start with the chart. So here's the mortgage bond chart. All you have to understand is this. This is what I monitor. That number right up through there. If that number's red, that's bad. That means mortgage rates are going up. Look at the gap we had today. If you watch me frequently, many times we come in with a gap. This gap's bad because when it goes down, mortgage rates are going up. Hopefully we fill in the gap, meaning this goes up and brings rates back down to where they were. So we'll check that out at the end of this video. So right now we started the day minus 17. So let's get to the economic news that we have for today that will be playing a big role in this. And then tomorrow we have the Federal Reserve coming in. I'll show you there's 100% certainty they're going to do this. What is it? Well, let's get to today's news. The first thing we want to start is right through here. If oil's up, the rest of the market's probably doing pretty bad for today. But we might have the Dow Jones coming in a little bit higher. NASDAQ might be coming in a little bit lower. It had a nice little rally yesterday. But let's see what's going on with the market. But everything is really predicated right now on oil. Because if you look at one thing, let's go first over to the economic news. Here's what we have for today. We look at jobs and we look at inflation. Why? Well, that's what the Federal Reserve looks at. So if you look at today's number from ADP, now I don't give ADP a lot of credibility because many times their numbers are hugely volatile. But right over through here, this was the last reading. Well, the last reading, this got revised. It was over 50,000 people. Well, 50,000 people in 1 week, that's a good jobs report. Actually, 50,000 jobs in a month is a pretty good jobs report. So ADP came in today and they revised it. They said the weekly job gain was 40,000. That's still spectacular. And they're saying this one is 39,000. So basically, we have a steady jobs market at 40,000 people a week. That's pretty darn good. What we're getting later today is the Case-Shiller Index telling us what home prices are doing. There's still crashers out there saying the market's going to crash worse than 2008. Please look at their track record up until this point. Home prices have been pretty steady, and they're supposed to stay that way right through here. So my expectations are, home prices are going to be basically flat, maybe up 1-2%. So you have some markets that are way down. That means other markets are way up. So in general, house prices are pretty flat. If you go to the Case-Shiller right through here, it's going to give us month over month and year over year. So we'll focus on that tomorrow. Yesterday, we had bond auctions that took place. They were actually pretty good. Okay, then tomorrow, the biggest news for the day tomorrow is the Federal Reserve is going to come out and tell us what they're going to do. Yeah, we'll have a whole bunch of other information coming in, but I think the markets are just going to hold tight and see what the Fed does. The good news is Chairman Powell's probably going to be booted out in May. He's retiring. We're going to get Warsh. He's a new official, and he's probably going to be on the tune of, well, we're going to monitor this thing. And if oil prices start to come down, we know other inflationary numbers are coming down as well because we monitor inflation and we monitor core inflation. Core inflation means it takes out food and energy. And that's what some of the markets are showing, that the inflation's actually starting to come down there, but oil is starting to ratchet that up. But the news that we're seeing right now and what the markets are trading off of is right there here, the earnings reports. Look over my head. These are earnings reports that came out yesterday. This company, I don't know what it is, a something, its earnings per share were up 37%. Behind that is 14%. Behind that is 1%. It's almost green across the board. So earnings reports are coming in really good for most of the companies out there. And this is shocking a lot of analysts because they're saying, okay, tariffs are getting pushed over. That's going to increase prices, putting pressure on companies. And now we have this inflation with oil hitting everybody, and that's going to hurt corporate profits as well. But so far, everything's looking good on the corporate profit side. So let's get over to see the Federal Reserve is going to meet in one day. What are they going to do? Well, based on the news, what would you do? We have inflation that's much higher than they want, much higher than the economy wants. We have a jobs number that's actually, we're creating more jobs in a week than we need in a month just to keep kind of net neutral there. So that's good news. So if I'm sitting on the Fed, I'm like, I'm just going to sit here and wait. Well, let's get looking over to it because I never thought there would be, but yes, there is 100% chance the Federal Reserve is not doing anything tomorrow. So our event's going to come out. We're going to say, okay, the Fed did nothing. But then we're going to start reading the context they spoke about behind closed doors. And then we're going to get a really reading from Federal Chairman Powell. This is his last meeting. So he might come out and kind of spill the beans on some things that might open up the market one way or another. So I think tomorrow is going to be a pretty interesting news event because it's his last one. Did you realize that? So here's what we're getting over to. The Federal Reserve, they're not going to do anything at the next meeting. And the things they look at are right through here. And this is what we got this week and most of this week. The Federal Reserve controls that number over through there. They look at the PC, the inflation number. We got that last week and it's 2.8. They want this at 2. It's not going to get to 2 anytime soon, especially with oil. Okay, then you look at the jobs numbers. You got ADP payroll report today and almost 50,000 jobs were created in 1 week. That's a good number. And then GDP, as long as it's above, 0, we're okay right through there. So if I'm sitting on the Fed, I'm not cutting either. Am I going to cut at the next meeting? Well, let's go back. Let's look at the probabilities of when they might cut. So if you go to the Federal Funds, the CME FedWatch group, you go over through here, it doesn't look like they're going to cut rates until next December. So I think this is going to dramatically change two things. When the Iranian conflict concludes, you're going to see major movements in the market. And then when we have a new Fed chairman, Warsh, he steps in. He'll be at the next meeting in June. And I think that meeting, they might start to inclinate, maybe we'll start cutting, and that's a whole game changer there. So what should you do if you're a homeowner or home buyer? Well, let me give you some tidbits here. So my name is Dan Frio. Like I said, I got some tools for you to use if you're a homeowner and you're drowning in debt or you're just trying to track rates. What do? Well, I have right through here. It's the debt relief calculator we just created. I'll have the link down below. But we also have tools for you guys on our website. So here's my website. It's therateupdate.com. If you're a homeowner, we got the debt consolidation tool for you if you're looking to consolidate some debt, or maybe you're just trying to track rates. Right up through there. It's called RateWatch 2.2. We'll track your rate for you and also your monthly payment to say, okay, Dan, when my rate drops 1 full percent, call me, text me, email me. We'll do that. But wonder if your savings hits $200, $300, $500 a month. You want to be contacted? Let us know right in through there. But let's say you're buying your first house, or maybe you're buying a house here soon, as soon as the kids get out of school. Are you fearful of where rates are going to go? Let's go back to the front again to where rates are. So here's my expectations. I've been saying since the war started, I'm expecting rates to be about 6.25 to 6.5. We're trading right in that range right through now. So there's nothing really that should spike this thing unless this war really gets ugly. Okay, so that's my thoughts. Once the war concludes, between earnings, oil, and everything else, I think where rates are going to come back down to where my expectations were at the beginning of the year, from 5.875 to 6.25. So we're above those levels right now because of war and inflation. So what should you do? I think you're going to be okay. What I would suggest, make sure you get pre-approved, not pre-qualified. There's a huge difference there. And with a rate at 6.3, make sure you get qualified at a rate of maybe 6.75. Why? Well, because if you can afford the payment at 6.75, well, payment at 6.3 would be more affordable to you, so making housing a little more affordable. We're trying to do the same thing for homeowners out there. So if you need some help with a mortgage, I'd love to help you out, folks. Like I said, my name is Dan Frio. I'm licensed in all 50 states as well as Puerto Rico, and I've been doing this for over 36 years. So I'd love to help you out if you're looking for a mortgage to buy, refinance, if you're an investor looking for a DSCR loan, or maybe you're a senior looking for a reverse mortgage to try to save some money for those ridiculous costs out there that other places charge you. Reach out to us. We'd love to help. So let's conclude with the chart. Where are we there for the day? So we are in minus 15. We started at what? Minus 17, minus 18. So it's coming back a little bit, but it doesn't look like we're going to fill the gap yet this morning, but only time's going to tell. We also have some additional financial news coming out later this afternoon, and we'll catch up on that tomorrow. So thanks for watching, folks. If you need some help with a mortgage, I'd love to be able to help you out. Check out my website. Check out all of our tools down below. But my expectations right now, our mortgage rates they're going to stay kind of steady right now. They might pop just a little bit in that range that I expected, but I don't think there's any huge move moves up or down until the Iranian conflict concludes. We get oil in line because right now the earnings reports are looking good, but it's just the oil prices are just staying sticky, higher for longer, causing these to stay higher for longer as well. So now hopefully you understand, if you're a homeowner, home buyer, where you can turn to for some help. If you're a realtor or loan officer, we got a lot of tools for you guys here as well. This is a new calculator, a new website we just created. It gives you all the tools that you need. Now, this might be a little overkill for the consumer out there because this is all mortgage related. Let me go through it with you real quick. The top of the bar, these are the top things we talk about each day, okay? Along through here, you're going to have a lot of pieces of the puzzle. You realize you can change the colors of this thing and all kind of things. Here's another cool feature up through here, comparing programs. You can just click it and it does all that in the click of a button. Okay, but then down through here's what you're going to get. You're going to get the MBS report, that chart that we go over each day. You're going to get the 10-year Treasury. This is what people watch if they don't have access to the MBS. You're going to get today's headlines information to let you know, is this how this is going to affect mortgage rates? Then you go down through here. This is going to tell you what rates are doing for the day. Are they getting a little hotter? Are they getting a little lower? This is going to give you basically some guidance for the day. The snapshot of the day, we go over the Dow Jones, the S&P, the NASDAQ. Then we look at oil, see where inflation's going. The VIX, that's the anxiety level on Wall Street. And also Bitcoin. That's kind of gives us the risk threshold of the markets. Then down through here, it gives you all the Federal Reserve information. And I can't get this darn thing to work on that number of days it takes until the Fed's next meeting. But what I did is I added Kalshi and the Poly markets down through here to give you their predictions on what the Federal Reserve is going to do next. But now that you watch this video, you know the Federal Reserve is going to do nothing at the next meeting because there's a 100% chance they're going to keep rates exactly where they are. So that's my report for today, folks. I hope you enjoyed it. Hope you learned something. And if you haven't subscribed, please do so over there. I have over 8,000 videos talking about real estate, mortgage rates, different programs to make you a better steward of your money, and also know a little bit more about the real estate market so you don't get hosed when it comes to real estate. So that's it for today, folks. If you need some help, reach out to me at therateupdate.com. Otherwise, don't forget to subscribe. Join me tomorrow morning to see how it starts another day. And also, we'll be live tomorrow at the Federal Reserve. Once they come out and start talking to the media, I'm going to show you what exactly they say and how the markets react to it. So thanks for watching, folks. Have a fantastic afternoon, and I'll see you next time. Bye-bye.